welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to sectoral indices to all the stocks that are buzzing in trade. And also, we'll get you expert views amid the earnings season. Where should be your focus currently? But first up, a quick check on how the benchmark indices, Sensex and the Nifty are moving as we speak. Well, it's a flattish trade, and it has been so throughout the trading session. So very, very lackluster move throughout the trading session, and 17,617, the current level on the Nifty, is absolutely flat with just a 2-point loss. Look at the Sensex, that's moved up slightly in the green, but again it's just about a 30-point gain, 59,600, the current level for the Sensex right now. What's doing better, in fact, in the markets is the broader markets, the mid and the small cap 100 indices that are slightly up in trade. In fact, they've also given up most of their gains in the afternoon trade, and they're just about 0.1% up in trade. So very, very choppy as far as the markets are concerned, even in the broader market space. Again, the mid caps have slipped towards the lowest point of the day, absolutely flat in trade. In terms of the various other sectors, the Nifty Bank is up by 0.25%. The auto stocks are moving slightly higher. And when we talk about the private banks, among the financials, that's doing better. PSU banks have slipped into the red. Financials are absolutely flat. FMCG is down by 0.5%. IT stocks are now dragging again. Apart from that, it's the pharma stocks that are looking at sharp profit booking taking place, about a % or so decline for that one. The healthcare index down by 0.9%. Realty pack also declining in trade. So largely in the red zone as far as I can see amid the sectors as well. Let's welcome our guest on the show. Mr. Nipun Mehta joins in. He's a well-known market expert. Mr. Mehta, good afternoon, and thank you so much for taking the time out for this discussion. How are you looking at this overall market and the consolidation that we've been witnessing through this week after the consecutive 8-9 days of a rally on the upside? Are we going to see some more consolidation taking place, and what is it that will pull the markets out of this range-bound trade?
Good afternoon, Sakshi. Thanks for having me on the show. I think after a few weeks of strong up move in the markets, you're seeing a range-bound sideways movement that's happening, clearly coming out of fears on higher inflation. We saw yesterday's UK inflation showing up more than 10% still. There are those fears that probably inflation in certain parts of the world and larger economies isn't under control. I think the Fed meet in May would be a clear indicator of how the Fed looks at inflation, how the Fed looks at any further interest rate hike. And there's anticipation that there could be another 25 basis point hike and a halt after that. So that's something that will be looked forward to as far as markets are concerned. I think the initial set of results, again, in the IT space weren't too encouraging. That's something which is, again, dampening market sentiment. So I think it's important that the subsequent set of results that now are expected over the next couple of weeks, among the larger ones, there's one tomorrow, obviously the larger banks. I think some of those will give a clearer indication of how the market sentiment might move.
Right, exactly. And this is what exactly I was coming to, and to understand further as to what is your own assessment of the earnings season so far. I mean, like, we are off to one okay number, one bad number, and one terrible number, and that's for Infosys. And after Infosys and TCS, we are looking at HCL Technologies reporting its numbers today. We are expecting again a flat kind of a number for that one as well. Your own assessment of the earnings season so far in the IT pack and HDFC Bank from the banking space as well?
So clearly, to an extent, they've been a dampener. Also, not just the results, but also management commentary on subsequent growth or maybe FY24 growth, which was just about single digit, is something which is indicating that order flow has slowed down, decision making has slowed down. There is uncertainty as far as larger IT IT companies. Managements of larger IT companies that FY24 might not have the same kind of flows. I think it's a wait and watch for a couple of quarters. Most larger companies, particularly in the, let's say, the banking space or the telecom space, which are the larger clients as far as some of these IT biggies are concerned, they would also wait and watch after what we've seen in Credit Suisse or SVB Bank. that kind of turmoil is something which would have slowed down order flow, and that's something which probably in a couple of quarters might show up if there are no further accidents that happen in the banking space. You might see orders coming. Yes, the initial IT results haven't been great. Bank results uh, lesser than street expectations, but clearly, I think strength showing as far as the banking space is concerned. In subsequent large PSU banks would be a clearer indicator. Our sense is
Okay.
some of those results could be better than anticipated and could show the strength as far as the banking space is concerned going ahead.
Okay, if I stay a little bit longer on the IT pack itself, I mean, so far for TCS, Infosys, like you also pointed out, of course, there was a lack of visibility on the order wins, uncertainty really becoming a big overhang in the commentary as well, and that was getting reflected. Will HCL Technologies follow suit, and what is your own expectation from HCL Tech now?
So, uh, I think on the dollar returns, if you see constant currency returns, constant currency revenues, they would obviously show a degree of growth. Our sense is what's important is how the next couple of quarters could pan out. And while if one sees the sort of the indication that the Infosys management gave, it was relatively low, it's just about 4 to 6% in terms of growth, while TCS was better. Our sense is HCL Tech could be more on the somewhere in between, more on the lines of closer to what TCS management gave as indication. Rather than what the Infi gave. I think that the Infi results were relatively, or projections, management commentary was relatively conservative. I think next quarter or two will give an indication on how the order wins are likely to continue, or what kind of delays are likely to persist within the IT space from the banking and telecom space going ahead.
Okay. For the entire sector as a whole, the IT space, what exactly is a bigger problem that you spot that the companies are facing at this point in time? Is it the slowdown concerns? Is it the lack of visibility as far as the order flows is concerned? A while back, I mean, a few quarters back, it was attrition that was emerging as a bigger problem. That's ebbing now. How are you really assessing the pecking order of the problems that they are facing, and which is the biggest one among them?
Clearly, it is the order wins that's slowing down decision making, particularly after uh, one, maybe 3 or 4 quarters back, when there was initial fears of recession or slowdown happening in the US and in the Eurozone. That's when orders started slowing down a bit. You saw Credit Suisse and SVB happen in the banking space, again going into a shell in terms of taking decisions on how much they should be spending during 2023. I think all of those are bigger issues right now in terms of decision making, in terms of order placement, and despite having budgets, those kind of order placements aren't happening. Clearly, given the uncertainty within the banking space and what the Fed perceives as how the interest rates would move, and
Yeah.
or the kind of inflation movement that is there. I think that's a bigger uncertainty. Attrition and all of that is a far lesser problem as far as most IT companies are concerned, and a lot of them are in fact smartly doing cost cutting. Uh,
Yeah.
and not and so incremental hiring is really not happening, and that's something that will really stand them in good stead, at least as far as the most larger Indian IT companies are concerned.
Yeah, so I was about to come to that itself as far as the valuations are also concerned for some of them. Now, some of the IT stocks are down about 50% also from their peak. Infosys is down about 35% from all-time high levels. TCS down by 22%. Emphasis, Wipro, the other two IT stocks that are trading well below their average PE levels as well. And both of them have in fact lost half of their market value from the peak levels as well. Tech Mahindra has eroded 44% of investors' wealth as well. So all of these streets poster boys, are they cheap enough to be looking at as a fresh opportunity, or for those who have been holding such stocks from long time to start accumulating at these levels?
Valuations for the entire IT space are definitely becoming interesting, becoming attractive. Yes, there's been a significant erosion as far as the stock prices are concerned. Uh, Clearly coming out of, and one must keep in mind that it's more the the conservative commentary coming out, or sort of not very encouraging, not very optimistic commentary coming out from after quarterly results, which has actually resulted in this. While actual results haven't been as bad as what the street would have perceived. I mean, they're marginally below expectations, but they're not as bad as. I mean, there's not been sort of sharp lack of visibility in terms of subsequent growth or subsequent quarter growth that is there. So our sense is yes, there has been there's value that is coming out gradually now as far as the IT space is concerned. Uh, it's important to watch some of these two or three of these larger companies still coming out with results. Wipro, HCL Tech, TechM, Persistent, some of these companies, and what's the indication that those managements give. But if post that over the next quarter or so, if there is further erosion in stock prices, I think value is gradually emerging, with most of them being at their historical low Ps within the IT space.
And where would you really find conviction amid the large and the mid caps? And what would your own pecking order be in case you had to pick these stocks at these levels?
If we're talking of only the IT, I think
IT.
clearly both large and mid. Really, if one looks at some of the small cap stocks, there hasn't been that kind of a fall. In fact, some of them are, as we speak, are constantly showing an uptick. They haven't been affected as badly as some of these biggies are, who are dependent on global orders. A lot of the smaller companies, which have been dependent more on domestic orders, haven't really got impacted to that extent. So in terms of value, I would guess both large and mid-cap IT companies selectively are becoming attractive bets. If one looks at them from at least 2 to 3 year perspective, over the next quarter or so, they could become even more attractive price-wise.
Okay. Moving on from the IT pack, of late we've been seeing slight bounces in the pharma space, in the realty space as well. Are you convinced about the buying one is seeing of late in these sectors?
Not entirely. I think on the one side, real estate space showing an uptick more coming out of the fact that there aren't expected to be further rate hikes, and there could be gradually cuts maybe in another 2 or 3 quarters that one could see. It's more in anticipation of that you're seeing the uptick as far as real estate is concerned. There is still a fair amount of inventory left in metros, which is in line with, let's say, the average inventory levels that one had seen over the last 3 or 4 years. So there hasn't been significant sales happening to the extent. I mean, if one looks at very large transactions, one has seen quite a few large transactions maybe over the last couple of months in some metros, more coming out of the taxation aspect of the tax benefit that those large transactions were giving the buyers, rather than exactly there being a significant demand that was there. So our sense is yes, inventory still continues to impact, or will continue to impact the real estate space, as would let's say housing finance companies, because of higher interest rates. Get impacted in terms of demand. As far as pharma is concerned, yes, there has been a gradual uptick that one is seeing. I think it's very selective. I think also dependent on specific announcements that we are seeing as far as certain companies are concerned, not necessarily followed up by positive, sort of positive results or huge revenue uptake. So I think
Yeah.
one still needs to be cautious as far as the pharma space is concerned.
Okay, where exactly are you looking at, conviction amid this earnings season? Is there any particular sector that's on top of your radar right now?
Well, banking continues to be one of the preferred spaces. Within
Okay,
that, our sense is PSU
sure.
banks might show better results, given the fact that their uh, deposit growth has been fairly robust. And of course, their balance sheets have got cleaned up post over the last 3 or 4 years as well. Uh, if in case let's say an SBI or some of these larger PSU banks do show up the kind of profitability that's anticipated, you might just see further re-rating happening as far as the PSU banking space is concerned. Beside that,
Okay.
I think the capital goods space should show up very encouraging results for the quarter.
Okay.
Flow for them has been good, execution has been good, and you are constantly seeing more and more orders that most of these cap goods companies are getting. So their order books are healthy, maybe at least 2 or 3 years of order book that's showing up for most of them. So that should be a positive space. Our sense is selectively autos also,
Okay.
if the kind of numbers that one has seen for this quarter in terms of higher sales, that's something that could show up in terms of profitability for the quarter as well.
Okay, understood that. Well, thank you so much, Mr. Mehta, for being with us and sharing such insights about all the sectors that we've spoken about and the way the investors should be looking at these sectors right ahead of the Q4 earnings as well, and opportunities in case they can look at tapping at this point in time. But definitely a wait and watch as far as the IT space is concerned, and we'll continue to keep an eye out on the numbers that will continue to flow in starting today for the HCL technology space as well. With that, many thanks for joining us. Let's look at the markets. In fact, some bit of buying coming in as we inch closer towards the end of this session. The markets are about, about 13 points up as far as the Nifty is concerned, 17,631. And the Sensex is also moving higher by almost 100 odd points. So there's some pickup happening there. 59,661, the current level for the Sensex as well. What's really helping the markets or the sentiments to really pick up? Some of the sectoral indices that are looking at some buying happening with the banking space especially, and the private banks inching higher in trade right now as we speak. Among the stocks also, if you see, there is some buying happening among the auto space stocks as well, some power stocks. So all of them are actually gaining a little bit of strength. We'll keep an eye because just about 10-11 minutes to go for the markets to shut shop. Will it really be a day when we actually stall the consecutive 2 or 3 days of markets being in the bear territory? We'll continue to give you all those updates, and for that you should be with us on Business Today TV. Don't forget to subscribe to this platform and also continue to engage with us on our other social media platforms as well. That's Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in.
एप्पल साकेत, भारत का दूसरा फ्लैगशिप, एप्पल का फ्लैगशिप स्टोर, जिसका भी कुछ मिनटों पहले ही टिम कुक, जो एप्पल के सीईओ हैं, उन्होंने इनॉग्रेशन किया।